An appeals court for the Federal Circuit has ruled the Trump administration does not owe risk corridor payments to insurance companies. Let's back up and talk about how we got here and then talk about the new court decision. We're talking about payments to insurance companies through health reform. There were many ways to cushion insurance companies against extreme gains or losses, mostly losses in the early days of Obamacare. And this was to protect insurers who attracted a sicker risk pool. It was meant to be temporary, but it was working along other market stabilization programs like risk adjustment and reinsurance. So in the original statute, risk corridor payments were to be issued to insurance companies that were paying out a lot more in claims than they were necessarily getting in premium dollars, because they might have been attracting a sicker risk pool. Part of the individual mandate that says everybody has to have insurance and that it has to be provided to people that have pre-existing conditions. So people that didn't traditionally have insurance in the past were welcomed to the marketplace for the first time, which meant a riskier population in some particular markets. Risk corridors was supposed to help cushion the insurance companies from absorbing that big hit right away. So some insurance companies did see a very sick marketplace right in the first couple years of open enrollment. Risk corridors were meant to be around for the first 3 years of open enrollment. Now, that was not required. Risk corridor payments were not required to net at zero. They weren't supposed to completely balance out what was happening in the marketplace. Which means that in some instances, as some insurance companies had really healthy risk pools and they were paying money to the feds could help use some of that money to offset some of those sicker risk pools and balance that out, but it didn't have to net at zero. What happened in the meantime was 2014 was a year when a lot of insurance companies had a lot of expense because they had sicker risk pools. The feds were supposed to pay out that money. There was a political fight saying, some GOP senators saying, we don't want to bail out the insurance companies. We're not going to pay them the risk corridor payments that are required by statute. So there were some changes. There was a 2015 and a 2016 appropriation bill where Congress changed that to now saying payments to insurers could not exceed collections. The feds don't have to pay out money to insurance companies if they're not making a lot of money off of other insurance companies. It also added that the Centers for Medicare and Medicaid Services could not transfer funds from other accounts to pay for those risk corridor payments that were owed to those insurance companies that had the sicker risk pools. So in sense, they made the risk corridor program revenue neutral. That was done by appropriation bill, all because of this political fight saying risk corridor payments are insurance bailouts. Now, keep in mind, a lot of those same states that were arguing we shouldn't be paying for insurance company bailouts are still a lot of the same states now that are asking the feds for federal money to do reinsurance programs. So that we've kind of come full circle on this, where they're all of a sudden realizing, hey, we need to stabilize our marketplace. If we would have done that back from the start, we might not have seen premiums increase because insurance companies wouldn't be passing on the cost of what they weren't getting from the federal government to the consumer in the form of higher premiums. So we're now left, after those two appropriation bills, we're now left at this status of the insurance companies not getting enough money to offset the risk that they're seeing, and they're being owed money by the federal government, but because the rule says they have to be budget neutral, the federal government's not paying anything. This went to court, as you can imagine. The feds never paid. Insurers sued. They're seeking billions of dollars, and over the course of the last couple years, the amount owed to insurance companies is now somewhere in the range of $12 billion. This went to court. The lower court split, so it went to the appeals court, and the appeals court for the Federal Circuit on June 14th was divided, but had enough of a majority to say the federal government does not owe these insurance companies the money. Now, these insurance companies can appeal to the U.S. Supreme Court, but the rationale that the court was using was saying, hey, Congress passed a bill saying that the program could be budget neutral and they can't get the money from any place else, so therefore, no harm, no foul. Now, there was a dissenting opinion that said, you know what, but they were still owed money. The fact that the appropriation bills changed in 2015 and 2016 doesn't absolve the outstanding obligation these insurance companies were owed in 2014. That was the dissenting opinion, however, that was not the majority opinion. So what is the impact of this? You know, a lot of health policy experts are saying, well, this is unfortunate, but insurance companies are kind of making up the difference anyway. They're owed $12 billion. They're never going to see it from this administration. They've passed on the cost to their consumers. They've essentially passed on the cost to the federal government because they're charging higher premiums. If those individuals that are charged those higher premiums are eligible for tax subsidies, the federal government has to reimburse the insurance companies for those tax subsidies at a higher amount. So the feds are paying a little bit more anyway to those insurance companies than they would have otherwise. So some health policy experts are calling this water under the bridge. There are some insurers, however, that went out of business because they weren't getting their risk corridor payments. It was a contributing factor to a couple insurance companies closing after the first year of open enrollment in the marketplace because they had such a risk pool that was very unhealthy and very expensive, and they didn't see a dime from the federal government to offset those expenses. And a lot of those were the consumer-operated and oriented plans, the co-ops that were supposed to be more oriented to favoring the consumer over the industry. So right now, today, we have only 4 of the original 23 co-ops operating in the marketplace. And so that's one sector of the industry that took the biggest hit. And we're not really hearing a lot from them at this point, but you can read up on this and see what you can hear. You can read the ruling out of that circuit court, the appeals court. You can read more on risk corridors. Kaiser Family Foundation has a great explanatory tool talking about the market stabilization features, including risk corridors. And you can read a little bit more on co-ops and learn about that market model for providing insurance to consumers in a consumer-oriented way. If you have a question on this or want to send us an email, you can do all of that at healthwatchwisconsin.org.